This is 1340 WJOL. We are Will County's News Talk Sports. It is time. Are you ready for this? It's time for Money Talk, brought to you by our friends at NuMark Credit Union. And joining us this morning on the Turk Furniture studio line is this guy's got a pretty important title. He's the Vice President of Mortgage Lending. It's Harry Stewart. Harry, what's going on?
Hey, what's up, Scott? Long time no see.
Yeah,
talk to, right?
Yeah, it's been a few days, actually. I missed you. Well, welcome to Harry Stewart. Harry has been with NuMark Credit Union for several years, and today this is a really important program because today we're going to be talking about mortgage refinancing tips, and millions of Americans literally have taken advantage, Harry, of refining during the pandemic. People need some cash. Maybe they've used their credit cards too much. They need to take that equity that they have in their home and let it work for them. Not, doing a commercial here or anything like that, but a lot of people have seen their, salaries go down short term. Hopefully they'll come back, and it is a tough time. I mean, we did a story today where 52%, get this number, 52% of young adults between the ages of 18 and 29 live with at least one of their parents. That's the highest number since the Great Depression.
Yeah, I could see. I wouldn't mind. My kids are good kids, so I wouldn't mind having them, stick around for a little bit. I like the company, because there's certain feeling of emptiness, when your kid leaves. My son moved out last year, so it's just a different change. And my daughter sent her off to college, so it kind of wears on you. But I could see that happen. Now, if they're just sticking at home and not doing anything, that's terrible. But if they're trying to better themselves, I don't mind.
Well, it's easy for you to say. You still got like 8 of them at home, so you're still okay.
Yeah.
I'm an empty net. Yeah, well, seems like 8. I'm an empty nester, so yeah, I'm the one that's sitting here going, huh? What do I do now?
Yeah. Oh yeah, you told me about that. It's a different. It's definitely a big change.
Like, I'm kind of, don't tell anybody, but I'm kind of digging it. All right, so let's move on. Harry, you have been with NuMark for how long now?
I've been here for 10 years.
For 10 years. All right. So you started just after the crash. So compare now to then. We're in much better shape, aren't we now?
Oh, I think so, as far as real estate and mortgages go. Because remember when we were talking, it was all about the inventory. I think Will County had an incredible amount of inventory, like 17 months of inventory, because all those foreclosures were on the market, and it was kind of really stagnant. There was no new construction. Now, if you look at it, we've got tons of activity, tons of people buying, tons of people refinancing. We've got new construction. If you drive around the subdivisions, you're seeing homes go up. So I think it's almost a night and day difference from what it was 10 years ago.
Yeah, no doubt about that. And what's great about now, too, and you've mentioned it before and you mentioned it, people have equity in their homes where that wasn't the case back in the crash, right?
Exactly. Home prices kind of came down. A lot of areas have really increased over the last 10 years. My subdivision kind of stagnant, hasn't really gone up as far as we'd like it to. But those are kind of the breaks,
Yep, no doubt about that. All right, Harry. Mortgage rates have been low for a long time. I'm guessing it's still good to refi because they're still low.
Yeah, it's not just a good time, it's a great time, or the best time to refinance. The rates have never been this low. Right now we've got 15-year products in the low 2s, 30-year products in the mid to upper 2s. So with rates like that, I hate to say free money, but it's almost like free money. And they've never been this low. When I got in the industry back in '96, we were doing 8-9% rates, and I remember there was a point where the rate actually dropped to like 7.25%, and I'm like, I can't believe the rates are this low. Now, if I quoted somebody a 7.25%, they'd probably throw me in jail because it's so high, But you know what I mean? Yeah. Like it's a big difference from what we kind of grew up with and what we're used to.
Yeah,
so,
no doubt.
I would say most people I'd be able to help maybe 3 or 4 out of 10 people, and now every single person we can benefit at one way or the other.
Harry,
So.
where are your rates at? I mean, you mentioned them, but specifically as of this morning, that's the first thing I'm sure someone like you, when you come in the morning, the first thing you do is you look at those rates and what happened to them since the last day. Where are you right now?
Yeah, I did them right before the phone call, actually. I would say a 15-year, just to give you a roundabout figure, maybe 2 1/8, and maybe a 30-year, maybe 2.75 on a 30-year.
Wow.
So it's fantastic.
What about home values now? You mentioned your neighborhood is, not perking up like some of the others. What about values right now?
Home values are increasing. Right now, it's a seller's market. So a lot of these homes that are going up on the market right now are getting multiple offers. They're being sold basically within a day, sometimes a week, 2 weeks. So they're going really fast. And what that does, that just it drives up the average prices. So the average prices, at least from what I'm seeing, are definitely increasing.
All right. That's good news. All right. Reasons why people would want to refi. What are them? There's several of them.
Yeah, a lot of different reasons. It all come down to the individual and their personal benefits, more or less. But I would say the most common stuff is going to be reduction of a rate, which affects your payment. Reduction of term, somebody wants to pay off and build equity a lot faster. I see a lot of people going from like a 30 to a 20 or a 30 to a 15-year. I also see a lot of people taking out cash to pay off credit card bills, which are higher interest, sometimes auto loans, maybe big purchases, home improvements. Kitchens are real expensive to remodel. Investment properties, I've seen some of that where they'll take out cash for a down payment on an investment property or a vacation home. So I've seen all sorts of stuff. So it would have to provide a benefit to doing so. So if you're just looking for rate and term, we could definitely help because the rates are low. And if you're looking for cash out, it's almost like an added bonus because if they're getting cash out at the same time, I'm dropping their rate in 90% of the cases. I'm dropping their rate. I'm giving them the cash, and usually their payments staying about the same. So
yeah. All right. So before thinking about refining, does someone need to think about how long they're going to stay in their home? Is that an issue?
I'd say, yeah, absolutely. If let's say just on average, if I'm talking about $1,500 in closing costs, and you're saving maybe $100 a month, and you're just doing it as a rate and term, it's going to take you about 15 months to break even and realize the benefit. If you're selling your home in 12 months, it wouldn't make much sense to refinance. But a lot of people think they're moving, and then all of a sudden they look at what they're doing, and it's 5 years later. So if they've got a set plan, hey, we're moving, we're selling in 6 months, I would probably say let's not refinance because you're not going to realize the benefits of refinancing in that short of a time. But if you plan on staying there for 5 years to realize the benefits of the refinance, I would say it would be a good deal. My general rule is if you could drop your interest rate by 1% and recover your costs within an 18-month period, it's a good deal.
Yep, no doubt.
If the break-even point is 11 months, it's even better. Or if you drop your rate even farther than 1%, it's a better deal. But that's basically my general rule.
We're talking with the Vice President of Mortgage Lending, Harry Stewart from NuMark Credit Union. This is 1340 WJL. Money Talks. Coming up at the end of the program, we're going to give you a $25 Visa gift card, compliments of NuMark Credit Union. You're going to be able to drive through and pick it up at their Crest Hill location, but you got to be listening closely because we'll ask you a question at the end of the program, something that Harry says, and that's going to be our question. We don't know what it is yet. Well, it could be a number of things because Harry's already given us a lot of valuable information. Now, Let's talk about value of your home in terms of the appraisal. That probably is going to have a lot to do with your ability to refi, correct?
Yeah, well, it's one of the three C's that I talk about: credit, capacity, and collateral. And collateral value that's really the only wild card that we have to deal with, because right off the bat, I'm going to know credit, I'm going to know capacity, which is your ability to repay the debt, income versus expenses. But the value is something that we can make an educated guess on that by checking different sites like Redfin, Realtor.com, Zillow's another big one. We could kind of get an idea of what the value is going to be, but we really don't know until an appraiser goes out there and does it. The nice thing now, because of COVID, we're getting like a lot of appraisal waivers where we don't actually have to send an appraiser to the home. So if we plug in a value and Fannie Mae says it's a good value, they have the property before, they'll give us a waiver for it, so we won't have to get an appraisal.
Okay. How do you find out how much your home is worth without doing that appraisal? So let's say you want to do a refi, but before you go through the whole process, you could do a little research on your own, correct, to find out what your home might be worth, at least a ballpark number?
So when I don't have a good idea of what somebody's home's worth, I try to think like an appraiser, and I will go to a site like Zillow. And what I'm going to do, I'll look at all the sales of within the last 12 months of homes similar to mine in my subdivision. I think it's like just a little yellow dot, and just start clicking on them. I say, okay, that one has a finished basement. I don't. That one sold for $200 or so. So I'll just keep clicking on those and just seeing, just to get a good idea. And I'll try to find one as close as possible to mine within where the sale was within 12 months and where the distance is within a mile of my home, just to get a good idea.
Okay.
And that kind of gives you, if your neighbor sold their home sold for $200 and it wasn't like a stress sale, like a foreclosure or anything like that, it sold for $200. It's got very, very similar square footage, bedrooms, and layout as yours, maybe even the same model with a lot of these homes that the builders are putting up. If it's the same thing, you have a good idea of where your value is going to be.
Okay. Harry, what is the best option out there? Or let me kind of backtrack here just a little bit. There are several different options that are out there. What are a handful of those, please, in terms of getting a mortgage?
You know what? For refinance, most of the refinances that we're doing are just conventional mortgages or conforming mortgages, either sold to Fannie Mae, Freddie Mac, or Federal Home Loan Bank. There are other options out there. You could do streamlined FHA loans or VA loans. But my first option is always to try to do a conventional loan. Now, on the purchase side, I do like VA mortgages. They're 100% financing with no MI. It's tough to beat something like that. But the government rates right now haven't been as favorable as a lot of the conforming rates. So I try to first work up a conventional refinance or conforming refinance. And my second choice is always like the FHA, VA stuff. So.
Okay, all right. How do you know which one's best? Just talking to you, a professional?
Yeah, that's the best way. Sometimes the option presented might be the only option, in some cases. But
Okay.
if you have good credit, good income, and you qualify for all the loans, we could look at and see which one's the best option for you.
What should we expect to pay in closing costs?
For a refinance, I'd say it's anywhere from $1,500 to $2,000 total with title, recording, appraisal. I'm not including the initial escrow deposit in there, which sometimes that could be $500, sometimes it could be $6,000. So it really depends on your taxes and insurance once you escrow those. And that's kind of a wash anyway, because if you escrowed with your previous lender, you're just going to get that back. So it's not like it's a cost to you. It's obviously you still have to fund the escrow account. It's really your money to pay the taxes and insurance, so it's not like it's a cost to or a fee that goes to the title company or NuMark. So,
Harry, what's the biggest mistake people make?
I guess the biggest mistake right now would be not having somebody take a look at it to see if they could get them something better. So I would say that's probably the biggest mistake, letting it go, especially when the rates are this low. I think everybody should be at least exploring their options, or at least checking it out.
What's the time frame from when I sit down in front of you at the office or give you a call or an email? How long does this process take?
I would say a refinance where we're going to need an appraisal, I would say I'm going to say 6 to 8 weeks, and I'm being conservative. If we could get it done in 5 weeks, I'd feel great about it, but I'm going to just say 6 to 8 weeks. If we get an appraisal waiver where we don't need an appraisal, I would say maybe 4 to 6 weeks.
Okay. All right. Well, here it is right here. Here's your pitch, your sales pitch. Why choose NuMark?
So NuMark, we're not like a big bank that's constantly screaming for profit. We're not for profit. Our only purpose is to serve our members. So all of our costs are passed through. We're not looking to make money off of our members. We're just looking to provide a service. All of our members are part owner of the credit union. Typically, we're going to have lower rates, closing costs than any of our competitors. A lot of people will say, well, Chase is a competitor or Bank of America is a competitor. They're not really competitors because they're looking for profit. And if you do an apples to apples comparison to any of these larger banks, they're not even going to be in the same ballpark as us. Like they're more about volume and people using them because they've always done. But if you come over to the credit union, you'll see the difference.
Okay. All right. And last but not least, how can people get a hold of Harry Stewart, the Vice President of Finance at NuMark Credit Union?
Well, the easiest way is just to call NuMark, or you could call me directly. My number, 815-744-6767. Or you could always go to our website, www.numarkcu.org, NUMARK, the letter C, the letter U.org. Go to mortgage loans and then apply. And there's like 10-minute application on there. It's really easy to fill out.
All right. And I gave Harry a career change. I should have said Vice President of Mortgage Lending. All right.
What did you say?
I said finance. That would make a certain someone mad. Bonanza, he wouldn't like that very much, would he?
That's fine.
Yeah, poor Jimmy. Make sure you let him know. I'll send him an email and tell him I'm replacing him with you. Ladies and gentlemen, it's Harry Stewart. As always, my friend, you are first class. Thank you very much.
Thanks, Scott.
All right, take care of yourself. There he goes, Harry Stewart, Vice President of Mortgage Lending with NuMark Credit Union. With NuMark.